on our total loan which is outstanding. Our total loan which is outstanding on the Kenyan projects is about $35 million. The currency has depreciated by about 20 shillings to a dollar, and therefore we had to provide close to 690 million shillings for the depreciating shilling.
Yeah.
Now, this is a provision for the IFRS, and we have to provide for the depreciating currency. However, this does not mean that the performance or the cash generating ability of the company has fallen. Our revenues have gone up by 37%. Our EBITDAs have gone up by 32%. In terms of pure cash flow and profitability, the performance of the company has gone up by over 30%. It's just that we have provided for the depreciating shilling on our loans, and that is what has taken the profit figure down.
Let's continue to talk about this provisioning, because at the moment we are seeing the shilling recover, but not significantly. Inflationary pressures persist in this economy, and it doesn't seem to be that the authorities have a grip on how to manage the shilling. Given the net imports that go into your inputs, what do you think is going to happen going forward? How are you going to manage a currency that's fairly volatile?
A very good question. Just wanted to indicate to you that as a company, we have 20% of our revenue, which is coming out of dollarized exports. 20% of our revenue we earn in dollars. Now, our total turnover is close to $80 million. 20% of that is approximately $17–18 million. Every year, the company earns $17–18 million. Now, in terms of our liabilities to pay off the imports, which we do, which is only coal, and to meet our loan repayments and our interest repayment, the company needs just about $11 million. So if you see, our dollar earnings are significantly higher than our dollar liabilities. And hence, going forward, in the business model of ARM, we have a natural hedge to take care of the depreciating shilling. Now, we have provided for the unrealized exchange losses. Next year, we are going to have, again, no realized exchange losses. This year, we have not had realized exchange losses. In the future, we are not going to have realized exchange losses. We would only benefit from a depreciating shilling because we have more dollarized revenue than our dollarized costs.
Besides what's happening on the forex side, you have said that your EBITDAs are up. So in terms of those who are investors into ARM, what's the sort of earnings per share? What sort of benefits are they going to get from you?
Well, our earnings per share have improved by 32% as compared to last year if we were not to account for the dollarized exchange losses. And therefore, in pure terms, the shareholder value has gone up by 31–32%. Given this fact, the investors and the shareholders can hope to see the company continue its growth policy and have no impact on their either in terms of the share price or in terms of the dividends. We expect that the company's growth policy will continue over the next 5 years.
All right, and now going forward, just the macro environment, we do know that you saw higher sales figures, up 37%, but just as we were speaking to an analyst before talking to you, he did say that, you know, cement tends to be a lagging indicator in terms of demand for housing, mortgage financing, and that by next year we would have seen some of that demand wane. Do you concur with that?
Well, first and foremost, you know, the demand for cement comes from various sectors. It comes from the infrastructure. Today, 20% of the total cement demand is coming from infrastructure. These projects have 24–36 months duration. These projects are already funded for. Kenya, for the first time, has seen new roads, new bridges coming up, new investment going into infrastructure. Now, over the next medium term, 2 to 3 years, we don't expect the demand from infrastructure to come down. The second segment is the retail sales. These are customers who buy 4, 5 bags, 10 bags every month to construct their houses. piece by piece. Now, this segment doesn't get mortgage. This segment needs cement because it is a necessity rather than something which they are trying to get based on a mortgage loan.
Okay.
So going forward, we have seen that this segment the demand is unlikely to fall. The only segment which is where we may see a demand which goes down is the organized real estate development. Now, organized real estate development is dependent on mortgages. The mortgage market in Kenya is just developing. And therefore, we feel that 85% of the market would not be impacted. Maybe only 15% of the market would be impacted by the macroeconomic factors. The market this year has grown by 16%. Next year, our take is that maybe the growth rate may slow down, but we will not go into a negative territory as far as the cement growth is concerned.